Tesla stock is flying today. Elon Musk and Tesla having a very, very good day. All Tesla shareholders, very good day. So I woke up, went into Fidelity, and up $37,000 here today on good old Tesla Massa, up over 9%. We got to speak about what's going on here in regards to Tesla, which is pulling up other stocks in the market as well. Meta stock's up very nice here today. We're up about $9,700 on Meta, up another $3,600 on Amazon. It's even pulling up Palantir today. Palantir's up nearly 5%. This is a $4,000+ mover for us here today. So we're going to speak about what's going on here in regards to Tesla. I want to speak about a few other stocks. There is some news in regards to Meta here today. I want to talk about some news in regards to kind of Fubo, indirect news there, and a few other stocks to speak about. So busy video. I appreciate everybody joining me as always. Thanks so much for being here. And before we even get into this, let me just say, that's why it's such, Tesla's one of the most dangerous stocks to short in the market, and people they never learn their lesson in regards to the stock. They try to short it. They try to do these things. You never know with Tesla. First off, Tesla's a great long-term company, but the second is, in the short term, this stock can pop 9% out of nowhere. Snap of fingers, and all of a sudden it's up 9%. And as a short seller, you can't just lose 9% like that. That's not how that works, right? So Tesla, never a good, unless you think you're the best in the world at timing out these stocks, never a good short sale opportunity. People try it again and again and again and lose their face in this one. 9% mover, and no one was expecting a 9% move here today, okay? So what happened in regards to Tesla, and kind of what's my opinion on this? Well, something did happen. Check this out. Morgan Stanley sees Dojo boosting Tesla's value by $500 billion. The firm raised its target price to a street high $400 a share. Analyst sees potential for unappreciated value in stock. Wait a minute. Hold your flippin' flapjack and horsies for just a moment. Because when I read this first, I'm like, Morgan Stanley? And then I was thinking, Adam Jonas? And it was like Jonas Brothers. And then I was like, wait a minute, I swear I heard this guy before. Sure enough, I remember him back from 2019. This was back in May of 2019, okay? Morgan Stanley has cut its worst case forecast for Tesla from $97 to $10. Now this was pre a bunch of stock splits. So this was actually in today's terms, who knows, maybe $1 or $2, okay? Citing concerns about the company's debt load and geopolitical exposure. Tesla shares at that time were down 38% year to date, right? And this was just at a time period in 2019 when a bunch of guys were cutting price targets on Tesla. They kept bringing down Tesla stock. It kept crashing. By the way, back in that time, I thought Adam Jonas and Morgan Stanley were an enemy. But, sometimes the people that you think are your enemies are actually the best thing that could ever happen to you. Because here's the deal. Those guys were bringing down Tesla stock. And meanwhile, I knew what I knew in regards to Tesla, and I was buying shares left and right during this time frame, right? 435 shares here at $13.12 on a split adjusted basis. $225 here at $12.57 on June 4th, 2019. June 24th, 2019. Another 255 shares at $14.88 on a split adjusted basis, right? So I want to say thank you, Adam Jonas, Morgan Stanley, all the analysts back in those days that were downgrading the stock left and right and, had all the bad stuff to say, because you looked like the enemy back then, but you were actually my friend. I just didn't realize it at that time. Thank you. Okay, so what's going on here in regards to this whole Tesla Dojo upgrade situation here, Adam Jonas, Morgan Stanley? Well, Tesla was a leading gainer in the S&P 500 index on Monday after Morgan Stanley upgraded the electric vehicle stock and called it a top pick. Very nice. Analyst Adam Jonas turned very bullish on Tesla after factoring in AI upside from the Austin-based company, Dojo's supercomputer. Interesting. No, because you don't even hear anything about Dojo almost ever unless you're really down the Tesla rabbit hole for the most part. Notably, analyst Adam Jonas said Tesla has built a custom AI ASIC chip that, due to its core function of processing vision-based data for autonomous driving use cases, can operate more efficiently than the leading cutting-edge general-purpose chips on the market at a fraction of the cost, he says, which is very intriguing, right? Now, we do also know, okay, to be fair, we do also know what in regards to Tesla and NVIDIA, okay? Well, we do also know Tesla has been placing a massive amount of orders for NVIDIA's highest end chips. So that is something we do know. So I think it's very important because some people think like, oh, maybe Tesla has chips, they don't need NVIDIA or something like that. Like Elon Musk brought up NVIDIA twice on the last conference call, twice, okay? And basically said he's trying to order as many chips. Elon Musk is trying to order as many chips from Jensen and NVIDIA as possible. Jensen's the CEO of NVIDIA, okay? So that's just something to kind of keep in mind there that I think is very important for everybody out there, okay? Now, while it's difficult, quote, while it's difficult to explicitly validate the many claims Tesla has made about Dojo's cost and performance, we believe Tesla has a chance of bringing forth a competitive, customized solution given the company's innovative track record and capabilities. Look at that. Tesla getting the benefit of the doubt. How about that? What a change a few years can make, right? What a change a few years can make. Absolutely amazing. Now, Morgan Stanley's base case for Tesla stock is $313. They have a bull case of $400. Remember, this is for the next 12 months. And they have that was base case price is $400. Oh my gosh, their base case is $400. I thought that was their bull case. And they have a bull case price target for the next 12 months of $550 for Tesla, which is, about a double up from here. Wow. Okay. What a move. Now, for all of us that are down the Tesla rabbit hole, we all know that Tesla's the leading player, in our opinions, right, in the self-driving movement. And we are of the belief, all of us Tesla bulls that have gone down the rabbit hole, that Tesla's going to win robotaxi, that they're going to be the first to scale that out in a significant way. Whether that's next year or the year after, like at some point it's coming. We do know that. It's just a question of what year. And people have been trying to predict this for a long time. It's a very hard thing to predict in terms of when robotaxi will hit. But it does look like Tesla should be the leader in that market. And so it is a little dangerous to start pricing in anything in regards to that because you're not getting anything material for numbers yet from that, right? You can say, well, if somebody, pays $12K or whatever it is for the upgraded, obviously, Tesla self-driving package, you could say that's revenue coming in. But I would say we're at the small potato days of Tesla generating any revenue from self-driving. I think the big numbers are down the road when Tesla has a fleet of 10 million, 20 million, if not 30 million cars around the world out there that are being used. And they have an option that, in my opinion, should be $99 a month. And we'll see what they do long term there, but I think it should be $99 a month. And you pay for that subscription. And I think it would do absolutely amazing, right? So we'll see what happens there. But here's the other part that I don't think a lot of other folks are factoring in. This is very, very important in regards to this whole Tesla situation, okay? And this is even bigger numbers. If Tesla's really going to be the winner in this market, which they have a great possibility of being, right? Guess what they're going to be able to do? They're going to be able to license that technology to all the other auto manufacturers if they choose to do so. No different than their signed contracts with all these other big auto manufacturers to allow them to use this Tesla supercharging network, right? Tesla's an amazing company, got an amazing workforce, and they put in the money and resources prior to these things becoming a big thing. And then other guys realize, crap, we kind of need what they got. And so do keep in mind, that's a huge potential for Tesla over time as well. From the other, which, I mean, then you were talking about, do they have a 50% market share of self-driving over time, or 60% or 70%? I think that's the big question, okay? So good old Tesla, awesome day there, okay? Now, let's talk about Fubo, Meta, other stocks that have some big news, Qualcomm, and a few others, okay, and some opportunities in the market. So this news came out here today. The Charter Disney deal is reached right before the big Monday Night Football game tonight, which is probably the game of the week for the NFL, which is a very interesting timing, okay? It definitely shows that Charter wanted to get this deal done before the big Monday Night Football game tonight. I'm assuming they were losing a lot of customers. And losing a lot of customers to probably Fubo, but since they were giving Fubo so many customers, maybe they thought like only a few people were going to take advantage of that, and maybe like a way bigger number took advantage of that deal than they were expecting. I'm sure also YouTube TV benefited in a massive way from this as well, right? Now, when I first saw the deal, okay, I was like, man, I actually think Disney won this. I didn't think Charter negotiated well. I looked further into the details, after that, and I changed my mind a little bit, okay? Here's the details around this. So according to a press release, the key deal points include the following. In the coming months, the Disney Plus basic ad-supported offering will be provided to customers who purchase the Spectrum TV Select package as part of the wholesale arrangement. ESPN Plus will be provided to Spectrum TV Select Plus subscribers, which ESPN Plus, they've started to put like some content on there that, sometimes you're like, I kind of want this. This is more of a thing for if you're a college football fan. ESPN's been kind of hogging some of this stuff, and it's like, why are you guys taking that over there to ESPN Plus, right? So that's intriguing. The ESPN flagship direct-to-consumer service will be made available to Spectrum TV Select subscribers when it launches. Charter will maintain flexibility to offer a range of video packages at varying price points based upon different customer viewing preferences. Okay. Additionally, Charter will offer Disney direct-to-consumer services, which include Disney Plus, Hulu, and ESPN Plus to all its customers, including the broadband-only customer base, for purchase at retail rates. Spectrum TV will also provide its customers widespread access to more curated lineup of 19 networks from the Walt Disney Company. Spectrum will continue to carry ABC-owned television stations, Disney Channel, FX, the Nat Geo channel, in addition to a full suite of ESPN networks. Networks will no longer be available on Spectrum will include Baby TV, Disney Junior, Disney XD, Freeform, FXM, FXX, Nat Geo Wild, and Nat Geo Mundo. Okay, so yeah, when I looked in the details more, I feel maybe a little bit differently in regards to this whole situation than I maybe felt previously. Let's just call it that. Because, I don't know if I can say necessarily one company won over the other. I think Disney had a little bit of a win because also Disney's going to get a bigger, let's call it fee from Spectrum, from Charter. So I think Disney kind of won there. And I think with how fast the deal kind of went through, this was about, from the time Disney got dropped at Charter, I think this was about a 10-day span, which some folks were anticipating it could be up to 2 months. And so I think the fact that Disney got it done sooner is kind of a win for Disney, okay? I will say Charter won a few things here. I don't know the details of how much Charter is going to have to pay Disney extra than what they were paying before, and I think that's a very important detail. But they're going to have to pay Disney some more. But I think the way Charter structured some of this is probably beneficial in terms of the flexibility in the packages. And what does all this mean for Fubo? Okay, I think that's important. What does all this mean for Fubo? Well, at the end of the day, Fubo's had a crazy amount of signups. They're going to continue to have a crazy amount of signups this fall, regardless of whether this deal went through. This was kind of just like this was just a bunch of extra customers that Fubo, no one really anticipated. So this is definitely a beneficial thing to a lot of folks because you've had 14 million customers that probably wanted to watch a lot of those channels over the last 10 days that didn't get a chance to, and they probably looked into different services and options out there. Some of them probably signed up for Fubo or other services. Regardless, it was a net benefit in a massive way. But the bigger thing, I think, is this is a little bit of Disney's armor being, let's call it, pierced a little bit in this situation, right? Which matters in a significant way. This was a company standing up to Disney and saying, hey, we're willing to fight this, and we're willing to fight this for months. And I think it showed some weakness in Disney, and it shows that Disney is going to have to negotiate with all these guys and give them a lot of respect and give a lot of leeway into what these other guys want. Are these other guys going to be able to get everything they want? No. But are they going to be able to get a lot more than they got 10 years ago or 15 years ago or 20 years ago? Absolutely. And I think that's a net benefit for companies, obviously, like Fubo, okay? So that's a very interesting situation. It reminds me so much, just in a different space, of what happened with, obviously, like Nike and folks like Foot Locker and in some of those retail stores, where Nike a couple years ago was like, we're going to go more direct to consumer, and, we're going to cut a lot of these other guys out a little bit in terms of certain shoes and certain drops and all this stuff. And ultimately, that definitely did not work for Disney or for Nike, and they realized we really need these guys. And I think Disney's realizing they've tried to go so direct to consumer, and it hasn't really been paying off the way they thought it was going to pay off. And now they're realizing we need these guys, man. Like Disney needs YouTube TV, they need Fubo, they need Charter, they need all these guys. They need the satellite companies because they need every dollar they can get if they ever want that stock price going up again. Let's just put it that way. So that's kind of my 2 cents in regards to that, right? Now, this news came out in regards to Meta here today. The tech giant gained 2% after Wall Street Journal reported Meta is developing a new AI system as capable as OpenAI's most advanced model and more powerful than the one it released 2 months ago called Llama 2. According to the report, Meta is aiming to launch the product by next year. So obviously this is good news, and like, what does everybody need to get their landscaping done today, like specifically right now? So overall, I would say this is good news for Meta. This is another one of those things. It's hard to predict whether this is some sort of game changer for Meta, but we do know Meta is going to be one of the best beneficiaries from the AI movement as probably any public company out there. But a lot of it's really based upon the algorithms, like, what videos to feed you, pictures to feed you, all those sorts of things. And then obviously making the best possible decisions for advertisers. Because remember, what is Meta's biggest competitive moats? There's 2 of Meta's biggest competitive moats, and it's important that every single person that owns Meta stock understands their big 2 competitive moats, okay? The first huge competitive moat around Meta is the massive user base. I mean, we're talking about billions of people, right? That's hard to compete with. The second thing that is absolutely massive is the best return on investment you can get is from Meta versus everybody else, right? Between what they can provide you for Facebook and Instagram. So what's important about that is when it comes to this AI movement and everything that's going on there, it's all about getting advertisers the best return on investment possible. So they spend more money with you advertising, right? If you can get somebody, for every dollar they spend on with your advertising platform, you can get them $2 back for that. So win. If you can get them $2.50 back or $3 back or $4 back, it's a huge win, right? And so advertisers just want to spend more and more and more with you because they're like, my gosh, like we're getting such a positive ROI on this, right? So I think that's what's super important in regards to this whole situation is it helps one of their huge moats. It actually helps both. AI is going to help both their massive moats in a huge way. Obviously, for the consumer perspective, right, and keeping a lot of people engaged with the platform to give them the best content possible. But the second part there is giving advertisers the best bang for the buck. So all these other things in terms of competing with OpenAI, I think all that's just cherries on top. That's just like the Fubo charter situation there. This, anything here is just cherries on top, man. The AI side is already going to be so massive for Meta long term. Like if you're wondering how Meta is going to 1,000, that's how it's going to 1,000. Okay. Alibaba. So Alibaba, I mean, this, Chinese companies in general, it's like all of a sudden you get some good news and then you get bad news and bad news and bad news. And it's just random bad news, man. And here today, in regards to Alibaba, the Chinese tech company shed about 2% on the news that outgoing CEO Daniel Zhang would unexpectedly quit its cloud business. In June, the company had announced Zhang was leaving chairman and CEO of Alibaba to focus on the cloud intelligence unit, and now all of a sudden he's leaving everything. So, that's the type of stuff you have to deal with, in the public markets in general, but it's even a worse part when you're dealing with it kind of with these Chinese companies in general. And that's just why I continue to distrust them all. That's why I can't own any of these stocks, these Chinese stocks. No. This was an interesting deal. J.M. Smuckers is going to pay a big price for Hostess. Yes, the Hostess that I'm sure people remember, weren't they going under a few years ago? J.M. Smuckers agreed to buy Twinkies maker Hostess for about $34 a share in cash and stock transaction valued at approximately $5.6 billion. What? I thought that was a hefty price to pay, let's just put it that way, for J.M. Smuckers. But, these sorts of companies, they'll look for growth anywhere. And if it means buying a Twinkie company, you're going to buy a Twinkie company. Holy smokes, okay? Now, this is a stock I personally own. Okay, let's talk about this one and if I think there's a better stock out there than this particular stock, okay? Qualcomm. The chip stock jumped 3.5% after the company announced that it will supply Apple with 5G modems for smartphones through 2026. Interesting. The continued sales to Apple will boost Qualcomm's handset business and could soften the blow of potentially losing a critical customer. Absolutely. This is big. Now, you know what's interesting about this is I think it's interesting that Qualcomm basically gets to, call this out. Because Apple for years has been very secretive about knowing, when the chip breakdowns come, people can figure out, okay, this chip is from this company. But usually Apple, at least back when the Steve Jobs era was going on, right? He liked to keep things on the hush-hush with, what chip companies they were using and how they were using them and those sorts of things. And so even a company like Cirrus Logic Cruise, right? I was a shareholder of that company for years, and Jason Rode, who led the company back in those days, right? I believe he's only chairman of the board now. Jason Rode would never even specifically say Apple on a conference call or an investor conference. He would just say our largest customer. He would never, ever say we're working on the next iPhone, we're working with Apple, we're going to be in the Apple iPhone for the next 3 years, 2 years, 1 year, 10 years. He would never say anything like that. And so the fact that Qualcomm can just openly say, oh yeah, we're providing the chips for iPhones till 2026 at least, that's just crazy to me, man. That's crazy, because that was never like a thing, right? No, in regards to Qualcomm stock in general, okay? I like Qualcomm stock. It's a very good stock. It trades at a, let's call it a pretty fair PE ratio, forward PE ratio. I think the pricing on Qualcomm is extremely fair for this stock. I think it's a moneymaker long term. They have the technology that you just have to have for mobile devices. There's just no other way around it. And you got to ask yourself, are mobile devices going anywhere? As in, like, going away, or are these going to continue to be relevant? And obviously, mobile devices are going to continue to be relevant for a long, long, long time, okay? And so for Qualcomm, it's just a huge benefit for them. And if you make any sort of mobile electronic, it's hard to go around Qualcomm. I'll just be honest with you guys. It's really hard to compete with these guys. And they also have a bunch of other chips, like Cirrus Logic, I mentioned them earlier, Cruisy Doozy, right? When it came to Cruise, they always had trouble competing with Qualcomm when it came to the Android side, with us trying to sell any audio chips to any customers that were Android. And the reason was Qualcomm would kind of package deal a bunch of chipsets all together and give a huge discount that Cruisy Doozy just couldn't compete with. And so it reminds me a little bit of Microsoft, where Microsoft kind of bundles a whole bunch of products together, right? And sometimes people just feel like, I don't need to use Office, or I don't need to use another cloud product, or I don't need to use this because I got all my Microsoft stuff. And so even if it's not better, they'll accept it, right? Because the pricing is too darn attractive. No different than Cruisy Doozy, in my opinion, makes way better audio chips and audio codecs and amps and all those things than Qualcomm. But Qualcomm would just get a ton of the Android business, because at the end of the day, it's a lot cheaper to just use Qualcomm and bundle it all together and all work seamless instead of trying to do custom solutions. So anyways, that's a whole situation. Now, in my opinion, there's one semiconductor stock I like a little better than Qualcomm, although I'm enjoying my 65% gain in Qualcomm, and that is Skyworks Solutions. I do like Skyworks Solutions a little better. I think the company trades at a very, let's call it undervalued valuation right now. Great dividend company, great management team there. They've always had an extremely strong relationship with Apple, much stronger than Qualcomm, where Qualcomm's kind of, obviously fought these guys over time. Remember just a few years ago, Qualcomm and Apple were going at it, man. They were going at it. Skyworks never had that sort of situation. And also Skyworks has so many customers way outside of Apple as well. So I actually like Skyworks a little better than like Qualcomm, which explains why I have $4,000 in Qualcomm stock and why I have $66,000 in Skyworks Solutions, obviously, okay? I hope you enjoyed today's video. As always, I appreciate y'all joining me. Thank you for being subscribed. Pin comment down there. I just put together a brand new workshop for you guys. That is my investing foundations. It's basically a 5-part workshop. You guys should absolutely enjoy that. You get all those different video access there. That will be pinned comment down there. Make sure you enjoy that. It's absolutely free to access that. Much love as always, and have a great day.